Okay, well, welcome to this 23rd Fireside Chat. I must admit, when we started this series, I didn't think people would put up with me for 23 times, yes, but it seems there still is, people want to hear me. I don't know whether that's a compliment or not. Let me again say that the room is not a great one for this fireside chat, but we're stuck with this room, so we'll make the best of it. Yeah. I don't think I need to introduce you, Wally, but for the audience that's outside here, because we have the physical audience, and we then have about 120 virtual audience around the world that can also ask questions as well, because we've got that set up. Yeah. So Wally, I mean, you've played a key role in the sales tax world in the US for so many years. You're an institution of itself, yeah? And I think many of the difficult cases that have been brought before the courts, you seem to have been there one way or the other, yeah? So it's great to have you here and to talk about that. And to me, it's interesting to see the parallel debate that's going on in the United States with the debate that's going on in Europe and elsewhere on digital. I mean, we just had this presentation by the CEO of the World Bank, and in fact, she spent 5 minutes talking about digital tax and PEs. And I mean, I have never heard a top official of an international organization that has even mentioned the word permanent establishment before. Yeah, so she's obviously got her homework. Yeah, done her homework. So we'll have the usual format that we have. There'll be 3 or 4 rounds of discussions. At the end of each round, I'll give you a chance to ask questions to Wally, and then I'll try to give a quick summary at the end. Yeah. As I said, for the people that are out there that are not physically here, you can ask questions. You have the hashtag. You know how to contact us, and Eva will be sort of monitoring that. Yeah. We will finish at 7 o'clock because I know it's been a long, long day. Yeah. Productive but long. So with that, Wally, why don't we go to the first round then? And it's really what was pushing this decision, which I think was probably a surprise to a lot of people here. Why didn't it come earlier, yeah? Well,
I have to start with my favorite saying. Every time I give a speech these days, I have to quote Oliver Wendell Holmes, I said, a page of history is worth a volume of logic. The page of history as to why it took so long was that the court, in construing, and I have to be a little bit technical here, construing the constitutional grant of power to Congress, which has a negative implication, which is that the court has the power to say that certain things that states are doing violate that affirmative grant of power to Congress because they interfere with interstate commerce, even though Congress has not acted. The court construed those negative implications of the Commerce Clause 50 years ago to say that you couldn't require a remote business, a business without physical presence in the state, to collect a tax that was legally due. And it's very important, particularly for a European audience, to understand that the history of US consumption taxation imposes the legal obligation to pay the tax on the purchaser, on the consumer. So there's plenty of what I would call substantive jurisdiction. There's power to impose the tax, but how do you collect the tax? Yeah. You need to have the vendor in your hands, your grip on the vendor, to do what the court acknowledged was a usual familiar device, collect the tax. But the court said 50 years ago, if the vendor's not physically present in the state, there really isn't the jurisdiction, it's not the power to tax. So let's fast forward 25 years. 1992, the internet is just beginning to evolve. We still have mail order sales. The same question came up to the court, and the taxpayer said, look, this is the late 20th century. Physical presence doesn't matter that much. And what's interesting, at that point, the court said, well, at least some of the justices said, maybe it doesn't really matter that much, but we are a judicial body. We are bound by what's called the rule of stare decisis, let the decision stand. So we have to respect our own precedent. And by the way, there's an easy answer. Congress. The only reason we're even saying anything here is because Congress hasn't acted. Let Congress do it. Fast forward 25 years. 2018, Congress, of course, has done nothing. The internet between 1992 and 2018 has exploded. The amount of revenues at stake is enormous. And finally, the court said, well, we might have been wrong 50 years ago. Clearly, we were wrong 25 years ago, and now we know we're wrong, and we're overruling the physical presence test. That was a very long answer to your question, but that's the page of history that explains why in 2018, and by the way, it was a 5-4 decision. 4 justices still said, let Congress do it. So it was only because Justice Kennedy, who retired, said, you know, I'm an old guy, I'm leaving the court. The digital world is here. States should be able to tax consumption in their jurisdictions if there is enough virtual or economic presence.
And what role did the fact that, because in a sense, what's been happening in the US over the last almost 10 years is that the federal government has been farming out a lot of the expenditure functions to the states, and at the same time, the states have found that their revenue base is declining, yeah? So there's been real pressure. So were the states actually saying, well, we need this because if we are going to meet the expenditure obligations that are being put on us, we need the revenue?
Well, I think it's quite correct to say the states were chafing increasingly under the loss of revenue that they were suffering by not being able to tax remote sales. And the other thing that was happening, remember, another thing I didn't tell you or didn't say about the U.S. retail sales tax, again, this is mostly for the non-U.S. audience, but our sales tax was a page of history, a child of the Depression. It was enacted when there was no other tax. The other tax bases were either going away because property taxes were going down, property values were going down, income was going down. So we taxed transactions in the 1930s. Those transactions were in goods. Well, the states have never moved away from a tax on goods. So one of the other things that was happening, one of the things that caused the revenue loss was not only the inability to tax remote vendors, but more and more what used to be what you bought as a tangible product was downloaded. You downloaded your book, you downloaded your movie. So there was the pressure was growing and growing.
I see. And what about the attitude of the federal government? I mean, did they play any active role in this? Have they reacted, or they just staying in the background?
No, I think the federal government has as you know, assuming we still have a federal government. I think when I go back, we may be shut down.
We may close down in a little while.
Yeah. Congress has been very reluctant to intervene to make sensible rules, like any rule that they had the power to make, like a common rule that binds EU countries. And again, I think it's a page of history. Since taxing power is the essence of sovereignty, and since the states, at least in principle, I put this in quotes, are sovereign. Remember, we were 13 states that came together. That's why we have our electoral system. Even though more people voted for Clinton, she lost. Why? Because each state gets to use its electoral votes to elect the president. So that's our system. It's been our system. And in the history of congressional legislation, there's really only been one significant statute that limited states' power to tax, another 20th century statute which said unless an out-of-state business was doing more than solicitation in the state, you couldn't impose a direct income tax. So that's our story.
What about, I mean, the blocks and bricks and mortar companies? I mean, they must have been very much in favor of this. They were pushing for it.
Oh, absolutely. I mean, what was interesting, and here's part of how the earth is moving among our feet. And I think that here's what's quite interesting. It's quite correct, as Jeffrey points out. You had an obvious divide between the Walmarts of the world and what we used to think of as the Amazons of the world. I think it's quite an interesting story what happened by 2018. Originally, Amazon was a very, very strong supporter of the existing system under which they, as an online remote seller, didn't have to collect tax. Well, Amazon realized, to be Amazon, they needed to be as close as possible to the purchaser. If I want something from Amazon right now, I can get it tomorrow. I may be able to get it today. Why? Because Amazon has a warehouse right next to me. But, it wasn't owned by Amazon. It was owned by AmazonWarehouse.com. At some point, Amazon realized, and I actually said this, it was quoted in the Wall Street Journal, that was a high-risk behavior. Amazon ultimately threw in the towel. They threw in the towel, and like Walmart, they advocated for a different system. Well, maybe that kind of shift helped. We then have our case in 2018 where you have 3 big online sellers that said the old rule was good, but it finally collapsed. I think part of the reason was that to be a good online seller, you need to be near your customers. So even though part of your corporation is remote, you're still there.
Move on to the second round, then. What are the implications for the states? Perhaps first in terms of revenue. I mean, are they going to see a very significant increase in revenue?
I think so. I mean, if you look at the think tanks that, I mean, the number of billions of dollars that allegedly are lost, I guess nobody knows for sure, and there's always disagreement. It's in the many billions of dollars of revenues that are lost. So it's clearly going to have a significant revenue impact. And I think the proof of the pudding is, and this is what I think is the most amazing reaction, at least in my lifetime, is that here's a decision that was handed down less than 6 months ago. And we don't have a chart here, but I can describe it to those who can imagine a chart of states, beginning with Alabama and ending with Wyoming. There are 50 states. 45 of them have sales taxes. Within a 6-month period, 31 states have already enacted legislation that conforms to what the US Supreme Court said was presumably enough presence, namely either $100,000 of sales or 200 transactions. And again, the law changes every day. I just have to tell you this because when I woke up, before I left on Friday for Vienna, I checked my email. What did I say? California. Anybody ever heard of California? If California, can't ask the audience a question. If California were a country, where would it rank?
6th or 7th.
Fifth. US, China, Japan, Germany, California, based on GDP as of 2018. So this is not just some subnational jurisdiction that doesn't matter. It's the 5th largest economy in the world. So when California said on Friday that it's going to begin collecting tax based on, guess what, $200,000 or 200 transactions or $100,000 sales beginning April 1st, that was not an April Fool's joke.
I mean, how is the businesses, I mean, some of the digital businesses are going to be affected by this? Are they, I mean, have they put out profit warnings? Have they said, look, we ain't going to make so much money, or they'll just pass the whole the tax on to the consumers?
No, I think that, well, first of all, they're scrambling. Second of all, they are urging Congress and the states to at least, and here's where the OECD guidelines come in, or the OECD principle, keep life simple. Look, if you're going to do this, and they realize the handwriting is on the wall, and of course, remember, the big sellers are the ones that have less, I think, their argument is harder to make. If you're selling hundreds and millions of dollars in the states, you can comply. It's the smaller marginal sellers that have the problem. But there's pressure now on the states to make life simple. And I think it's important that the US Supreme Court, in saying that the economic presence that South Dakota required, namely the $200,000, the 200 transactions or the $100,000 of sales was enough, said, by the way, this legislation has 3 characteristics that make us feel better about saying this is okay, particularly in light of the fact that the actual sellers involved far exceeded those thresholds. A, not retroactive. Yep. So they cannot go backwards. Oh, the law has changed. Tough luck that you didn't know that the law has changed. So they didn't, you know, they said. 2, there were thresholds. Now, maybe they weren't enough. I'll tell you, come back to that in a minute. There were thresholds, so there's a safe harbor. So the court also said, guess what? More than 20 states are members of the streamlined sales tax. That simplifies and makes life easy. So the court said those 3 things were important, and South Dakota was a member of that. So these are all important. The one thing I will say, what about Congress? I've had the legislation here before me. Again, picked it up on the way over to Vienna. Two legislators, both from one of the 5 states without a sales tax, have introduced legislation, which I think has zero chance of passing for the moment. And what did they say? Threshold, $10 million. So I think that it gives you this. So maybe there'll be a compromise. When, as, and if there's congressional legislation, it will probably effectively read what this court said, say simplification is required if you want to require a remote seller, maybe the threshold will be higher than
but in one way, I mean, the move has sort of perhaps simplified the compliance for businesses. I mean, would you think some of these user taxes will now sort of just go off?
But what you said by user taxes?
Well, the fact that, you know, some countries, the way some of the states, the way they've overcome the lack of physical presences.
Well, the point is, the power to require me, a consumer, to pay the tax has always been there. The problem has always been, how are you going to get me to pay the tax? I just have to say that some states have said there's a line on your federal income tax, on your state income tax return that says, have you bought anything remotely? Yes. Well, then you owe us, please pay the tax. And we call that a tax on honesty. It doesn't work very well.
Yeah, tax. We shan't pursue that. And do you think this is going to actually lead to a noticeable increase in prices of goods that people buy over the internet?
You know, I got to tell you, I'm glad Jeffrey asked this question. I got to read you
and
what...
I didn't warn you. No. Ask this one.
So this is what the U.S. Supreme Court is quoting the language of why the present system was unfair. Wayfair was Wayfair, South Dakota versus Wayfair. Wayfair offers to sell a vast selection of furnishings. Its advertising seeks to create an image of beautiful, peaceful homes. But it also says that, quote, one of the best things about buying through Wayfair is that we do not have to charge sales tax. So now, whether prices will go up, I mean, I have to ask the economists. One of the things I've always said, you know, when I used to teach and explain to my students, you know, if people won't spend more than $5 for filet mignon, and you put a tax on filet mignon, the tax of filet mignon doesn't go up. And I still remember one other example of this, when Montana, back in the day, when the coal was something that was regarded as a good energy source, and Montana had most of the low sulfur coal, they put a severance tax on coal. In Kansas, they didn't like that fact because their people were going to have to pay more for energy. We're going to retaliate with the severance tax on corn, as if somehow putting a tax on corn would increase the tax of corn. Obviously, it's an economic question.
This doesn't sound dissimilar from the current debate going on with what happened between the U.S. and China, yeah?
Yes, exactly.
About retaliation, yeah? Why don't we move to the third round then? Because in a sense, you know, listening to you this afternoon and now, I can see a lot of parallels between the debate that's been going on in the US and the debate that's going on within the EU and the OECD. Yeah? Are there any lessons you think that will come out of this decision? Do you think it's going to influence the current debate on direct taxes at the OECD?
Well, I think, you know, first of all, the first thing we're all in violent agreement that we finally have the same problem, whether it's subnational US or international, and I know this is not about direct taxation, but I can't resist saying this, and I know that this is, I mean, whether you call it a virtual or economic presence, or a virtual presence, or a digital presence, I don't care what you call it, it's the same problem. And the problem is enforcement. And then how do you enforce a tax with regard to a non-physically present entity, whether it's direct or indirect? I think one interesting aspect in the US context, I think people have raised the question, do you think that now that the US Supreme Court has adopted a virtual presence, or at least acknowledged that that's okay, an economic presence standard in the consumption tax and in the indirect, how will that affect the direct tax context? What's interesting in the US, and again, here is a peculiar set of circumstances in the US, we already, in the direct tax context, we have subnational direct taxes. We've already crossed the Rubicon on that because the decisions over the last 25 years have said, no, economic presence is enough. And the court has discretionary jurisdiction, in fact, thinking that it probably made a mistake in sustaining the physical presence rule in the indirect tax context, has refused systematically to take any of the cases bubbling up that sustained a virtual presence concept in the direct tax. So first of all, we've been there, done that. So now, in effect, both direct and indirect in the US, we don't have a physical presence. Will it leak over to the direct tax debate? All I can say is I've been at enough of these direct tax debates that one of the things that complicates it is everybody can spend countless hours, I don't know how many billable hours, debating about where the base is. Does the market create income? Oh, no, market doesn't create income. We're just mining eyeballs, we're not mining coal. That's a huge debate, as you know, and therefore the debate is really not focused just on the enforcement. At least in the indirect tax context, we know where tax is destination, so we don't have to worry about that. So that complicates things.
But I mean, I can see, that the decision has had an impact on the debate both in the EU and in the OECD, yeah? Those people that say, look, let's get real. I mean, we live in a digital world. We can't all the time be relying on this concept, physical presences. And there's a lot of people that would feel that with the virtual PE concept. I think one of the key things, though, is the feasibility of actually administering stuff. Because the good thing about the physical presence, it's a relatively straightforward red line. You cross it or you don't. The difficulty is that in today's environment, it becomes less and less relevant, yeah?
No, I completely agree. And I also agree that I know somebody made a comment earlier today that if you read the US Supreme Court opinion, it's like you read that and they talk about...
It's damning.
Yeah, and it talks about the digital economy. How could anybody with air temperature IQ think that the physical presence rule is a good one in the 21st century?
But, you have to get real, Marty, because...
I'm an academic. I can't get real.
The international tax community has spent almost 80 years invested in the PE concept, yeah? I mean, when I joined the OECD in 1972, my first task was PE, yeah? When I left the OECD in 2012, one of the last things I did was PE. When they put me in my grave, I suspect somebody's going to ask me, what do you think of PE? Well, I said, I think I'm actually permanent now where I am, yeah? So it's, but seriously, there's an enormous amount of intellectual investment that's gone into this concept, yeah? And that intellectual investment has then been embedded in something like 3,600 bilateral tax treaties, yeah? And this is why this debate is so difficult, yeah? And it's even made more difficult, and coming back to what Chris Castellino was saying, is the implications of a change will have pretty significant effects on the division of the tax space between developed and developing countries. Why don't we take a few questions from the floor? Same rules. There's a microphone. Announce who you are and short questions. Who would like to ask a question? No? There we are. Announce your name and nationality.
Good evening. My name is Sudarshan. I'm from India. I'm an LLM student at the WU Vienna. One significant aspect from an Indian perspective, when India was the first to introduce equalization levy, and then they've also introduced a significant economic presence. So one of the discussions on defining what a significant economic presence is, of course, it's still the draft discussion going on, but informally, the income tax authorities have relied on the Wayfair judgment, and they said if the cookies, so they picked up, and if the cookie is present on the system, there'll be a deemed physical presence for the digital company. So thereby, and as per even the GDPR regulations, you need to accept your cookies. So as long as if the user accepts cookies and the cookies are in my system, there seems to be a deemed physical presence. So this is, I'm not sure whether it's a very preposterous extension of the Wayfair judgment. What do you think the Indian government stands on?
No, I think it's very interesting, and it's not preposterous, and it goes back to my page of history point. What's interesting is, if you look at what the states did during the pre-Wayfair period, we're not going to talk about the pre-Wayfair period, when they were...
Well, you're alive then, yeah?
Yeah. When they were suffering. I mean, again, I think if you go back originally, well, there wasn't a huge amount of online commerce. By 1992, it became important, and it kept growing leaps and bounds. The states were suffering. They were losing revenue. What did? They did anything they could think of. As somebody put it, there was a guerrilla war against the physical presence concept. And so what did? They said if somebody from your company attends a trade show in the state for a few days. But then they did things like the cookies. The click-through nexus was one example, where if in fact you, an out-of-state vendor, if you have somebody in the state that is physically present, that has a website, that clicks on that website to buy your product, now you've got physically present. Cookies, there's cookies legislation. A lot of this pre-Wayfair legislation trying to find some hook that relates to physical presence. But I would think, or I would hope, that one doesn't have to, one can be more candid now, say virtual presence, economic presence, defined in terms of transactions or amount of economic activity. That should be enough. You shouldn't have to pretend that it's a virtual physical presence, even though, again, this is another real point in the US context where, since we only tax goods, okay, so how do we tax the download of something? Oh, it's a digital good. If that makes people happy.
Digital good, virtual presence, virtual piece.
Exactly.
Raffaele, yeah?
Hello, Raffaele Petruzzi from Italy and Austria.
And I should tell you, he's the head of our transfer pricing center, so be careful here, yeah?
So,
Try formulary apportionment.
we can talk for we can talk for extensively about that. My question is related to still the issue of virtual PE, because also Italy, as India, is one of the countries that have implemented both virtual PEs and also this digital service tax. And on the virtual PE, I'm afraid that we will probably have a lot of them if this digital presence sort of definition will be implemented in various countries, but we still don't know how much profits we should attribute to these PEs. And the current set of rules, whatever with digital presence you include there, doesn't not allow you to attribute any profits to those virtual PEs. So the question is, how do you think we should attribute profits to such virtual PEs? I've heard in the US you are thinking of using marketing intangibles. I don't know whether this is a concept that is, I've been hearing it during a conference in India a couple of weeks ago from someone from the US, quite high level. So I don't know what is this concept that you're thinking of using, and whether you have any other way of attributing profits to a virtual PE.
I know to me, I don't want to make light. It's a very serious question, but I still remember when I first started thinking about this problem, both in the direct and indirect context. And I was actually delighted to see that under all the bilateral tax treaties, there's a force of attraction principle. So as long as you've got a presence, you can attribute any other income that is to that physical presence in the state, and then of course you have to decide, even long before the Wayfair case, what did have its source in the state. Now I think that it's the same question, and where, again, I'm not saying you should adopt formulary apportionment, but it does seem to me at some point the debates one has about where it is. Okay, does Facebook make its money from its algorithms that are apparently in the Grand Cayman Islands, or does it make its money from mining eyeballs in wherever? And if so, how do you figure out the amount? It's a difficult question, and I must say, and maybe I've drunk too much of the subnational U.S. Kool-Aid, but I'm not sure that a formula is as good as we get. After all, this is government work, and we have a concept in the U.S., good enough for government work. It's not rockets, it's not science. So I think it's a judgment.
It's a but I think one of the things, I mean, I know we're slipping away from that
Sorry.
for the moment, but we move back onto that. But I think one of the key things that has to guide the international community when they try to develop the response to the digitalization, you have to have some principles behind what you're doing, yeah? It can't be ad hoc, because otherwise you leave a lot of freedom to countries to actually do whatever they want, yeah? So you have to have principles. The second thing is, it has to be, any proposal has to be capable of getting a global consensus, yes? One thing that business would find very difficult if one group of countries went down in one direction, another in a different one, and a third group in a third direction, yeah? And the third thing that you have to have is the one you keep emphasizing, it has to be administratively feasible.
Right.
Yeah? So whatever solution's got to be on the table, it has to meet those three criteria. That's why I think it's going to take the OECD a little bit of time, in fact, to get that agreement. The US position has changed.
Right,
yeah?
right.
That's sort of very helpful. Any other questions on this part? Yeah.
Hi, Karl-Heinz Heidel, my name. I got actually a question from a friend who is watching.
Oh.
Doesn't want to be quoted. But a great question, actually, and thanks, Wally, for your great presentation. I think you showed again that there's a lot of things we have in common, both in the US and here in our VT world. And would you think that the US would, benefit from like a sort of one-stop shop? I think you mentioned the streamlined sales tax initiative. Yeah. Is there something which actually here now with this case we can also share OECD work, other work from all around the world, which the US could benefit from?
Oh, absolutely. I agree with you. And I agree. And of course, the best solution, I put this as a matter, just stepping back from the politics, the best solution would be simply for Congress to enact a set of standards that were binding on every state. There's ample power to do that. and we're actually binding on foreign suppliers as well, as though we then have the problem of the enforcing that jurisdiction. But clearly, there is ample power in the U.S. Congress to to enact the OECD guidelines, let's put it that way, and all the simplified procedure. And I think that what's interesting is the states have actually, on their own volition, they've moved part of the way there with the streamlined sales tax. But I agree with you fully, and I think that the international debate has and will continue, perhaps even more so, to inform what the states do, because the states, they want to be in a position where their rules are blessed by courts when they're litigated. So I think that's right.
Well, is there a mechanism, or, I mean, I know, but I can't remember the name of it now, for actually coordination between the states? Something that, I mean, like the role that the Commission plays, usually
Well, nothing with the Commission's authority, but there are many, there's something called the Federation of Tax Administrators. There are lots of voluntary organizations, and there are some agreements between the states. There's probably the most interesting, I mean, which the states are actually all bound. It's called the Interstate Fuel Tax Agreement, which is the idea is, look, when you buy motor fuel, your truck's running through 50 states, or maybe not 50, we don't have a bridge to Hawaii yet, but 48 states, and the rule is that gasoline taxes are basically user fees to pay for roads. And so the states have agreed that under common principles, you simply report your miles to a centralized authority. But that's the one, you could generalize that, but they've done it. It's doable, but it requires a lot of coordination. Actually, this involves Canada as well. It's the International Fuel Tax Agreement. So,
you got a question? Oh, yeah, right. And I think there was one, then you had one as well, yes?
I just wanted to follow up on, sorry, I'm Marie Pallo from New Zealand. I just wanted to follow up on Karl Heinz's question about the prospect of a federal approach to collection. Just on the basis that, needing to understand that what would actually be involved in actually obtaining anything like that, given that, it hasn't been so long since we've heard about this will never, we will never be able to implement a federal VAT, and some concerns certainly in past administrations about the aggressiveness of a VAT, and whether those obstacles are really too large to in practice actually be able to introduce something like that.
Well, the short answer is I think that's above my pay grade.
That needs a long answer.
But I'll give you a long. The short answer is above my pay grade. The other answer that I've heard, and I'm sure Jeffrey's heard this, whereas the problem, of course, the reason we have the political divide is that the Republicans think that the VAT is a money machine, and the Democrats think it's regressive. And when the Democrats figure out it's a money machine, and the Republicans figure out it's regressive, we'll have one.
But it's a sort of an interesting. Well, but somebody else had a question. Yeah. You had a question there? Yeah.
Yeah, hello, it's Christina again. I would like to point on the parallels that you mentioned between the US and the OECD approach to the digital economy and the EU's approach. I understand from that the most obvious parallel is that we should adapt our tax systems to the new reality. That's also the outcome of the Wayfair. However, in the OECD approach and the EU's approach, the fundamental question is whether we should change the rules that they assess the tax liability in the first place, and they don't so much relate to the tax collection as in the Wayfair. So, what would be, you think, the U.S. stance in this in the future, where we will eventually reach an agreement on the virtual PE that will have to deal with the allocation of the tax base internationally and not the tax collection of the liability that already exists? That's my question.
Okay, just to sort of give you, first, I'm not sure I fully understand. I think that with regard to the fundamental question of where the consumption tax ought to be, and where consumption ought to be taxed, there's really not a disagreement, at least at a fairly high level, that the destination principle, both in the U.S. subnational context and in the OECD context, is accepted. The other point is that when you talk about the U.S., remember, for the moment, we're talking about the states that each makes their own rules. We don't have a national rule. If we did have a national rule, would it reflect OECD concepts? I certainly hope so, and I think so. So I'm not sure. when you're saying that there's a problem, that it's not about enforcement. It seems to me it is, but there's one fundamental difference, and this is very important, is that, remember, we have a single stage tax. We don't have, one thing we don't have to worry about that you do have to worry about in the VAT context is what do you do about the stage collection process, and what do you do about refunds? What do you do about the fact that the tax is being paid all along the way? In principle, our tax is only imposed at the point where it is taxed, and in between, there's no tax. I'm not sure if I answered the question, but I...
Yeah. My question was that, as you mentioned, in the consumption tax in the US is a tax that is legally due already. So we cannot enforce it because we don't have the physical presence. However, in the EU and the EU's proposal recently, we try to impose a tax that is not legally due now, currently, but we try to allocate the tax liability in the first place. So that's my distinction between the different approach on the physical presence.
Except, I mean, ultimately it's up to each jurisdiction, whether it's the EU or the US or the subnational states, to define what I would call substantive jurisdiction. They're going to allocate the taxing rights as they see fit. Now, maybe they'll allocate the taxing rights in a way that's inconsistent with what the OECD says. You want to allocate to origin, you can do that, but then you're violating international norms.
It's on the principle that we're trying to implement. That's the basic question.
Is it not? Are you saying it's not the destination principle?
The principle that the OECD is trying to implement now. I mean, what's your opinion on the new principle of international allocation of tax?
Well, the new principle. I mean, everyone agrees that the destination principle is appropriate, and then how do you implement it? Read the guidelines. I mean, I'm not sure I'm answering the question.
Yeah, okay, thank you.
Sorry, I'm not. Yeah.
I'm sorry, just to clarify your question, are you referring to the digital sales tax or service tax? It's not about the VAT. It's a different tax.
Oh.
The DST.
Got it. Okay. Okay. Now, right. So now you've got a different tax. So now you are imposing a tax where you are, and I'm putting this in quotes. You're making up you got a new you're allocating tax. That's the whole point. I think the point would be this. Jeffrey will tell me if he thinks I'm wrong. If you believe that one way or another the current direct tax is not getting enough, not attributing enough income to the market, and if you don't think that VAT can do it, as some direct tax people said, then we need another tax. Let's call it a digital services tax. And every time Apple gets money or Google gets money by mining eyeballs, the jurisdiction in which the eyeballs are mined will collect the digital service tax. Different tax.
But it's going to be interesting to see whether it meets the criteria of administrative feasibility.
Yes, yeah.
I mean, I think the Indian experience, it's not been an easy tax to actually administer, yeah? And I think the same thing is in the EU. The other thing is that, and that always annoys me, we always sort of assume that within the 28 member states, there's a complete harmony of the VAT, yeah? And it's a bit of a myth, yeah? I'm sorry to say. Yes, the basic framework is there, but it's the Wild West out there afterwards, yes? Everybody twigs here, twigs there, yeah? And it's amazing, yeah? I mean, and perhaps now that you've got to the definitive regime, I hate that word, by the way, the definitive regime, yeah? Or you're getting to the definitive regime after 50 years of debate, yeah? Maybe there'll be a bit more pressure on the member states to actually have a coordination. Any other questions on this? Yeah?
Hi, Cap Schutte from the Dutch Ministry of Finance. I have a short question, and you already touched upon it, Wally, but just to clarify, the court has set a threshold on 100,000, or an indication?
The court has refused to hold facially unconstitutional a statute that has as the thresholds 200,000 of goods, 100,000 of goods, and 200 transactions, and has then also said that, without deciding every case, in this case, there's no problem because the sellers are huge and far exceed the thresholds.
But that's, been very successful in terms of encouraging the states.
Well, yes, the states have, every state has then, has read the opinion and enacted the legislation.
Yeah, because earlier today you mentioned about taxes, setting it up to 250.
This morning, yes.
Yeah.
Texas has just enacted a statute. So instead of 31 states when I flew over here, now 33 states. And Texas is a big state, and maybe Texas is more sensitive to $100,000 or 200 transactions not being enough. So they said 250,000.
So to what extent do you think that freedom will be for the states, and will there be new legislation that sets?
I think for the moment,
sets the boundaries.
Yeah, there's an overwhelm. If you look, I would say, roughly, 85% have adopted copied the South Dakota statute. A few haven't, and I think the only thing that will lead states to change it is litigation, which says that, guess what? 200 transactions. You sell 200 pieces of bubble gum, that's not enough.
And you can see the parallel here between the criteria that are set for the digital service tax and some of the criteria that the court has said, yeah? Any other questions on that? Any other issues? I mean, just coming on this cool question of, the debate at the moment on consumption tax is quite interesting because there are one or two, and I say just one or two countries, that are actually moving from a VAT back to a sales tax, yes? Is that a wise move? Malaysia, for example.
Well, I mean, okay, all I can say is, because we're still, why doesn't the U.S. have a VAT? I mean, here's one obviously advantages and disadvantages, and I think we all know that one of the problems with a staged collection process is that it can lead to fraud and to the money disappearing along the staged collection process. One problem with a retail sales tax, it's just a rule of thumb, the highest nominal retail sales tax rate in the U.S. is like, I just looked at it, it's less than 10%. I mean, the thought is, if you go above 10%, there is going to be so much pressure to avoid, so that's one. If you have a low tax, maybe the single stage tax will work. But in principle, I mean, the other, and again, I don't think it's endemic, but it certainly is part of our retail sales tax, which is, again, based on goods. We have a huge amount of business purchases being part of the sales tax base. So one would have to look at that.
And I think the fact that with the VAT, it's somewhat easier to get the rate of the standard rate up to 15, 20%, and you can have a better coverage of services as well. Yeah. But it's an interesting debate, that there are one or two countries saying we're reconsidering this and we're moving away. I think they're making a mistake, yeah, but that's another debate as well. So just coming back to the U.S. and the sort of U.S. exceptions, because there's now about 164 countries that have a VAT, yeah? So what would have to happen? That's a lovely question. What would have to happen for the U.S. to actually say, let's think about it? Not do it, but let's think about it.
Yeah, again, to me, given as we all are familiar with the anti-tax sentiment in the U.S., except maybe to build a wall, I think honestly, I think it would take a dramatic economic turndown where it was suddenly the realization that the income tax is not enough. When I teach income tax, I mean, it is extraordinary. We depend like 95% of our national revenues are direct taxes. Now, most of them are personal income tax, and there are a few small excise taxes. We just, what most countries, depend, a third of their revenues come from something we don't even have nationally. So I think that's what it will take. Because politically, for the moment, there's certainly not the appetite for it. And even the Democrats, if they got power in both chambers, would be reluctant to be, the tax party.
I think the only way it would happen in the U.S. is if the states came under such fiscal pressure, yeah, that they would start lobbying for it, yeah? And frankly, because of the Wayfair case, that's less likely to happen, yeah? But I mean, it's interesting because, I mean, the point you raised, I mean, the U.S., it's a very low-tax country, yeah? No? I didn't say a tax haven, it's a low-tax country, yeah? But its tax structure is such that it depends heavily on the direct tax side. Why? Because it doesn't have a well-functioning VAT. And I think, as you said, there's this political divide between the Republicans who say it's a money-making machine and the Democrats who say it's actually a regressive
Right.
tax. I actually think the argument is wrong. I think you can design a VAT in a way that is not so aggressive, but the main purpose of a VAT is actually raising the amount of money in an effective way, yeah?
Right. And the other point for the moment, although we would presumably solve this, I think that we would have the Canadian problem. When Canada first enacted a GST, then they had all these provincial taxes that were sales taxes, and now they basically have harmonized them. We would, I think, if we had a national VAT, we would do something, some kind of sharing of the base, because I think there's the concern, oh, well, sales taxes are for states, income taxes are for the, we'd have to do something about that.
And you would have to think very carefully about the name of the tax, yes? I mean, it could be called the TTS. What does TTS stand for? The Trump Tax for States.
Yeah.
Trump Tax for States. If he got behind it, yeah.
Right.
There's some questions online. So we're just coming to the online questions. Okay, so you ready? So what concept of economic presence in the US embedded in the current concept of PE under tax treaties? What impact could it have on the current tax treaties of the US?
Well, the current concept of PE, last time I read it, was a factory or a warehouse or some kind of physical presence. Now, certainly, and this is something I've had to explain to people, the fact that the court embraced virtual presence didn't mean that it rejected physical presence as economic. So economic presence includes physical and non-physical. So again, it seems to me that whatever is now listed as a presence under the PE is economic. It's just not virtual. What impact could it have on current tax treaties? And that's why I guess I didn't understand the question.
Well, would it in fact require renegotiation? I mean, if in fact you move to a virtual PE concept, you basically have to renegotiate 3,600 treaties, huh?
Yeah, I would think so.
Which could be quite fun if you're a treaty negotiator and if you're not part of the MLI, because you get to travel to a lot of countries. Yes? This one, what is the role of the technologies in monitoring digital economic activity in the US? Blockchain.
Well,
you know what a blockchain is?
I've heard about what, yes, I have some idea of what a blockchain is.
Yeah, you know, the first thing you have to say, a blockchain is not the same as a block drain.
Right.
Very important to get that distinction.
Yes, by my distributed ledger. I mean, I just have to,
oh, you, good.
Yes, yeah, well, actually, I have to, I hope this is appropriate, but I got an email saying that, we've discovered that you are actually spending all your time watching porn, we've got you, and they wanted me to pay them in Bitcoin. And they told me they were an honorable hacker.
Honorable hacker?
Anyway, so that's, but so...
this has gone viral now, yeah? Wally Harrelson, the honorable hacker, yeah? Wow.
No, I'm not the honorable hacker. The honorable hacker wanted to get paid in Bitcoin, knowing
you're going to get more tweets than President Trump tomorrow morning, yeah?
So in any event, I think that the role, it's huge. I mean, we need technology, and I understand that at some point we have to worry about things like privacy. But I think that there's simply no question about the role that technology is already playing and will continue to play more so in the future. Now, whether or not robots are going to serve me in the assisted living.
A young lady just wants to tax robots.
Not in the assisted living complex, please.
Yeah. Why would you want to tax? Anyway, that's another issue, yeah? Any other questions? You've exhausted yourselves? Well, you had a long day, okay. Well, in that case, then, no, I think that's it. So, well, all that rests for me to do then is just thank you, Wally, for that. I know you've had a long day as well. I think I've learned a lot. I like your sense of humor. I like the historical perspective that comes from your age. Yeah? I'd like to thank the technicians, in fact, for making this possible. I know it's been a long day for you as well. And also to thank the virtual audience that we have. We can't see you, but we can hear you, yes? Or I can anyway, yeah? And then also some thanks to the people who made this presence. Eva, she's done a lot of work here. She's only been here a month, and this is her first fireside chat. Thank you. And then we have Mother Melody. As I said, she's gone through 23 of these fireside chats, And I think they're getting better as we go along, yeah? I still would like to have a real fire, but that's another issue, yeah? Next time. So next year we'll have probably 4. We're hoping, in fact, to have Chip Harder from the US Treasury do one, Mick Keane from the IMF, yeah? And a few other personalities, yes? We're always open to suggestions. If you think you actually would like to see somebody in this slot and talk about something, just let me know, and I'll see whether I can persuade them to come or not, yeah? So that's an open offer, yeah? So what happens now? Well, we could continue to discuss tax, or we could go for a drink. Yes. So for the virtual audience, we're about to, in fact, go for a drink. I'm sorry, we can't. We haven't quite got to the stage where you can have a virtual drink. Yep. The cocktail takes place in the library. So you out of this door, turn right, and it's the orange buildings. The best thing is to follow one of the people that know. Jonathan, are you going? Yep. Jonathan's out front. He never gets behind for drinking. I'll be going. You going across? No. So just follow us, but it's basically the library of the Institute. It's the building D, second floor, yes? D3, second floor. Thank you. You've been very patient for the whole day. I think this is quite a nice way to end the day. Thank you, Wally.
Thank you.
It's been a pleasure.
It's been
Thank
great.
You.